How to find a company's profit. First thing we do is we start with the company's sales, which is also called revenue. Now from there, we have to add in any additional sources of revenue that a company may have. Once we know that, we then subtract the cost of that revenue, which is called the cost of goods sold. Now that could be the cost of making the product or the cost of delivering the service. Once we do that math, we get a company's gross profit. But from there, we have to subtract other expenses called operating expenses. Now, operating expenses can be categorized differently, but some common terms are sales and marketing expense, administrative expense, research and development expense, as well as non-cash charges like depreciation and amortization. Once we do that math out, we get a company's operating income, which is also called its earnings before interest and taxes, or EBIT. Now from there, we have to subtract out a company's non-operating expenses. Those can include things like income that the company earned on any interest, expense that the company paid on interest that it has, other income, which could include things like selling assets, and finally taxes paid. When we do all that math out, we are left with a company's net income, which is also called a company's profits or a company's earnings.